All right, you crypto aficionados, we got some sinister news today. But it's something that we all knew. But an ex-SEC chair, Jay Clayton, admitted that we as retail investors cannot get crypto until the big banks and institutions, i.e. the fat cats, get them first. We all knew this, and we all knew there were alternative reasons why Gary Gensler and the SEC did not want to approve crypto right now in terms of an ETF, but it's not for consumer protection. Of course, Jay Clayton tried to hide this and mask it under investor protection, but we all know that's a bunch of BS, and they just want to let the fat cats get in on it first. So, what we actually have here is ex-SEC chair admits retail can't have crypto until big banks do. This is from Coin Edition. So, ex-SEC chair acknowledges retail crypto assets depends on large institutions. Jay Clayton said the SEC may have alternative reasons for approving or rejecting Bitcoin ETFs. And we know they have plenty of alternative reasons because they're completely full of BS anyways. So in a recent interview, former SEC Chair Jay Clayton addressed the SEC's repeated delays in approving the first U.S. exchanged ETF investing Bitcoin. The interviewer questioned rationale behind these delays and whether they indicated an underlying intention to seek alternative grounds for rejecting applications. So Jay Clayton basically says, and this is like on mainstream media, on CNBC, so you know they're serious about this one. And this is what he said, quote, "It is clear that Bitcoin is not a security." This is from his Twitter. "It is something that retail investors want access to, and importantly, some of our most trusted providers want to provide this product to the retail public, and approval is inevitable." So, but he actually acknowledged also that retail investors cannot get it until fat cats get it because of consumer protection. There is a huge shift in the landscape and all of them are coming in. So basically, he admitted that the SEC was eventually going to approve one, but not until the fat cats are ready. So basically, this is all a delay and stall tactic. Now, we've been saying this for the last 3 years, but a former SEC official coming out and admitting this is an entirely different ballgame. So they're not denying it for investor protection. They're not denying it for, economic stability. They're denying it so the fat cats can get richer than retail investors can. So obviously, Deaton expressed strong skepticism for Clayton's justification in his approach. From John Deaton's Twitter, notice that Clayton says until large institutions, i.e. BlackRock, Fidelity, etc., offer it. Of course, he says BlackRock because BlackRock's the most noticeable one and all the theories are about BlackRock. We won't allow retail access. He literally admits that's how it works in the United States. Now, of course, he couches it all in the name of investor protection, which I reject as BS. Obviously, it's complete BS. It's just their rationale for the fat cats to get the bulk of the goodness. We are witnessing exactly what I said on CP Vane's Making Money show. Regulators are friends of the incumbents, and they have all finally accepted that they can't kill crypto. I think they accepted it years ago, and they've just been doing delay and stall tactics for literally forever, but will crush its price so that those same incumbent friends can get a larger slice. Now, I don't really know about a larger slice. They are probably suppressing it somewhat. Obviously, they can't suppress it fully because they were not able to stop both the 2017 and the 2021 bull runs, and every single peak it's been higher, every single trough it's been higher, and they haven't really been able to push it down, but they are doing their best to try to get it from blowing up. Now, obviously, they didn't engineer a giant inflation problem. That's really the Fed's deal, and that's really Americans' own fault for overspending and wanting that stimulus money, obviously. But they are trying to keep it down a little bit more down than it should be for as long as possible, and Jay Clayton basically admitted it. Now, Jay Clayton is an ex-SEC official, but he no longer works for the government or the SEC, so he is free to say these things without getting too many repercussions because he's basically he's not afraid of it anymore. And Jay Clayton has been very, very pro Bitcoin ETF. I think he's actually trying to recuperate some of that reputation for all the damage he's done as his time as commissioner. Because remember, he was the original one that sued Ripple. He was the one where all the Hinman corruption actually happened under. And he knows that he does not have a very good reputation among crypto investors. And this is a big industry in the time to come. And the thing is, like, because of that, he wants to like recuperate and act like he's the good guy now. I don't think any of us should believe him that he's the good guy. He is still one of them, or at least he was one of them. And right now he's just trying to make up for it. And he's trying to get people to be happy that he's saying an ETF is inevitable. Obviously, this pressures the current SEC, so it might actually be good. But I actually don't think it matters all that much what Clayton actually says, because Jay Clayton knows that it's inevitable, and everyone knows that's inevitable, and the SEC are just doing delay tactics. And of course, the judges in these lawsuits know that now, and they're not ruling in favor of the SEC. How long they can stall, I think the latest they can stall is probably next year, but they might want to let one through before that because of the loss in the Grayscale lawsuit. So the former SEC commissioner basically admitted that the SEC's reasons for delaying and denying the ETF are completely and utterly nonsense, and they're only doing it for the nefarious reason of letting the big institutions in first. And of course, the SEC can't outright sell Bitcoin or participate in the secondary futures market themselves. So the only way the SEC can actually suppress Bitcoin is via regulations, and that's whether that's trying to kill altcoins or that's denying the Bitcoin ETF. That's really their only plan of action. So now we have confirmation from an ex-SEC chair as to that's what their nefarious plans is. And no matter how much he tries to hide it behind other things, the truth is out now. And that might actually hurt them in the court case and in the court of public opinion as well. Another thing is Vitalik Buterin might be getting revenge because he sold all his MakerDAO. And why? Because the MakerDAO founder praised Solana. And obviously Solana is a competitor to Ethereum, although a competitor that continues to go down every couple of months. So he sold his MakerDAO in a petty move because MakerDAO's founder praise Solana. I don't know if he's trying to bring it down or something. MakerDAO probably is going multi-chain and all that stuff. Ethereum co-founder Vitalik Buterin sold some of his MakerDAO. This is from Bitcoin Systeme for the first time in 2 years, according to blockchain data. So he hasn't really touched these coins in a long time. And I don't know if it's a coincidence that he sold them all as soon as this guy made some comments. He exchanged 500 Maker, worth approximately $581,000 at the time, for 300 Ethereum. So he basically traded Maker for Ethereum. That's not very much for Vitalik, so I think it's too much to speculate on this, but it is strange that right after these comments, he sold some MKR. So he might be jabbing at this guy saying, hey, don't say anything else good about them. They're our competition, and if you say anything good about them, I will sell more and crush your price. All very petty, but still worth keeping a note of. And then he transferred all received Ethereum to an address which is now has over $1 million in assets. $1 million might look a lot like a lot to you and me, but to Vitalik Buterin, it's just pocket change. This guy has hundreds of millions, if not billions of dollars in Ethereum, probably one of the crypto billionaires. The exact reason behind Buterin's MKR sale is unknown. Obviously, Vitalik's not going to come out and saying, I'm bitter about MKR as CEO's statements, so I'm selling his coin to tank the price. He obviously did not say that, but the implications might actually be there, and this just might be a warning shot across the brow for the Maker guy saying, hey, if you're going multi-chain, that's fine, but there's going to be consequences, and you better shut up about these competitors, because if you don't, I'm going to sell your coin and tank your project. That could have been the implication of Vitalik Buterin. Remember, big whales like Vitalik Buterin with a lot of influence, they can make statements without actually saying anything by the movement of their wallets. And people do actually pay attention, because if they didn't, we wouldn't be getting this report right now on crypto news networks that he sold MKR right after the MKR guy made some positive statements about a competing chain. This also says that Ethereum is worried about competition. Despite the fact that everyone is bridging to EVM, they know that they're not very efficient and that technologically they're falling behind other blockchains, so they need to actually make up for it. And this could just be one of the ways that for Vitalik to stop some of the promotion from other blockchains, because if there is promotion from other blockchains, obviously it's going to hurt Ethereum as well. So we have to take a look at it from that perspective. And Vitalik could be using stealth ninja tactics to actually stall the funding and development and stop the praises for Solana and other layer 2s that he sees as a threat to Ethereum. Consensus might be doing the same thing sooner or later because they know they can't have people leaving Ethereum, because that's what their entire business is actually based upon. So I would look for a couple more shots across the brow, because I know that other L1s are going to start catching up to Ethereum, at least the ones with huge DeFi ecosystems, and they know that's where the value is. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.